Powell. Welcome to another GoldSeek Nugget, a special presentation brought to you by goldseek.com radio. You can visit our website at radio.goldseek.com. Today's featured guests, Bill Murphy and Chris Powell from the Gold Antitrust Action Committee. Listeners have heard of GATA, the Gold Antitrust Association headed by Bill Murphy and Chris Powell. The watchdog group has been hard on the heels of the gold cartel, and judging by the recent performance of gold, it appears the banditos are on the run. Welcome back, Bill and Chris.
Good to be here, Chris.
Yes, very much so.
Why don't we begin with what's been going on at GATA recently?
I was just on Bernie Lowe's Asia Confidential show at Thursday night here, Friday morning, Hong Kong. He's really a sharp guy. It had us on in March, and prior to that, the last time we've been seen on television was in January of 1999 with Ron and Sana on CNBC. So he's the only one willing to step up to the plate and let us be heard.
Here we are 10 years into one of the greatest bull markets we've ever seen. The mainline media seems to have a problem with reality here.
Just discovered gold, and simultaneously, Chris discovered that it's in a bubble. So, it never had its legitimate rise. It became a bubble the moment it was noticed.
Exactly. So as soon as we break over that $1,000 four-digit Maginot line, we're suddenly magically into bubble territory.
Well, Chris, this one gets me today. Market Watch headline: New gold bugs making gold investments mainstream. Tudor, Paulson, Greenlight, Heyman bring precious metal in from the fringe. In other words, when gold was $250 and $300 and $350, and we were jumping up and down what the price was going and why, we were the lunatic fringe. Now that it's over $1,100, it's respectable to buy in.
Central banking is a very subtle joke, Chris. I think people are starting to catch on to it only now that the whole financial system is collapsing largely because of the misconduct and negligence of central banking. And the more gold you own, the funnier it is.
We talk about bubbles, but I think they're missing the boat here, pointing the finger at commodities. I mean, the real underlying problem here is clearly in the dollar, but, we're also seeing gold and silver and commodities in general breaking out in terms other than the dollar, the euro and other currencies.
Well, I've been jumping up and about this for years because you're correct. All the currencies stink. The key to the gold market and why it's doing what it is today is because the physical gold market, demand for gold, is overpowering the ability of the gold cartel to suppress the price. If they could have the price at $800, they'd have it there. They don't have the gold anymore. The central banks, as you know, have turned buyers, much less sellers, and they only have their clandestine gold that they're leasing into the market to try to stop the pricing in there. But they're just hitting the wall. It's something that GATA consultant Frank Veneroso said in May 2001 at our GATA African Gold Summit in Durban, South Africa. And he said in 7 to 10 years, they're going to hit the wall. And here we are, right in the middle of that period, and guess what? The gold cartel's hitting the wall.
Incredible. Chris Powell?
Yeah, gold is really being remonetized, Chris. It's being remonetized by the markets, but it's also being remonetized, as we can see lately, by central banks. The International Monetary Fund sales that were scaring the market for so long turned out just to be a bluff. None of that gold is ever going to hit the market. It's just going to be exchanged between central banks because gold is money, and probably the very best money in these times of central bank irresponsibility.
There's a lot of talk about this new dollar carry trade as the Federal Reserve continues to hold rates between 0 and 0.25%. There's speculation that the institutions are pumping a lot of that free Kool-Aid, if you will, into the commodities and equities markets. Do you buy this as a legitimate impetus, at least recently in the markets?
Yeah, I think there's some truth to that for sure. But I think that the major thing, again, is these big buyers coming in, like these huge hedge fund guys, the most respected guys in that community, and then the central banks. A lot of the mainstream gold world keep saying the fundamentals are lousy. They are the most bullish fundamentals in any market in history. And that's why the gold price is on its way to $3,000 to $5,000 an ounce. The market is short gold. They have gold that's leased out that they can't get back. We think that's what some of the recent have been all about. And then you've got questionable paper claims on physical gold. So there's a real big short in the market, and these people are trapped, and that's what's helping to fuel this market rise more than anything.
You envision sort of a short squeeze here?
Well, I've been talking about it for some time. I mean, it's not just because of the recent price action. I've been pounding away at the table about how tight the physical market is. That's what GATA has been about for a decade, that there's more than half the central bank gold is gone. It's not there. It's leased out. The industry has it all backwards in terms of what this market's all about. Never have so many in an industry known so little about their own market.
Chris Powell?
Barrick is certainly feeling a short squeeze, and the Barrick situation is kind of representative of the gold market. Barrick borrowed and sold a lot of central bank gold. Now it's scrambling to try to get it back. The gap between gold production and gold demand has been very substantial, perhaps 1,000 tons per year for years now. That gap has been met only by central bank distorting. The central bank distorting seems to be stopping, and that is what is tightening up the market. The mine supply cannot meet demand in an age of monetary debasement. Monetary debasement is public policy, central bank policy around the world right now. So there's both the simple commodity case for gold that Bill was just talking about, but there's also the monetary debasement case for gold, and that's like 100% of the case.